Well, hello everyone, and welcome back to Risk. I'm Lee, and I have a returning guest, Mr. Gareth Soloway, trader extraordinaire. Welcome back to Risk.
Hey, thanks for having me back, Lee. It's great to be here.
So things have certainly changed since the last time we spoke. Market has certainly peaked up and gotten a lot more interesting. So, what's your current take? I mean, we got the Dow down severely today, but was it a classic case of sell the trumpets and buy the cannons last week, or?
I mean, it certainly seems like that. I mean, so the markets are dealing with two major things here, right? So we have Russia invading Ukraine, which initially was very scary for the stock market. And listen, it's horrendous on the ground there for the Ukrainians, but for the market specifically, the market initially freaked out, and then the market said, "Wait a minute. If this is going on and it's a geopolitical risk, maybe it slows the economy down. Does the Fed not move 50 basis points in March, maybe just 25? Maybe they don't hike as much this year." And that's why we saw this initial move to the upside. The problem with today is what we're seeing is oil is ripping higher, right? And we know that oil going so much higher is acting like a tax on people, and it's going to slow the economy. So, it's a double-edged sword here. You want the Fed to slow down and not hike as much because we love free money. The markets love that constant flow of money. But at the same time, if oil keeps going up, it could push us right into a recession, which is what the markets are now kind of worrying about.
I mean, it looks like the Fed has a gun to both sides of their head here. If they don't act, the markets crash. If they cut rates, then inflation goes crazy.
Yeah. I mean, the Fed is boxed in, and this is something I've talked about for the last couple of years, how, they were always so eager to pump the market and help the market because it helped the economy through the wealth effect. And then the problem is the market gets addicted to you doing that, and you always have to do it. And the question is, at what point do you allow a market to be an actual market? When do you allow an economy to be an actual economy? And at this point, they can't anymore, because if the Fed really steps away, the economy will crash. You will have a depression type situation, but now you're dealing with inflation. So you can't really just print money willy-nilly anymore because of the inflation side now being such a dramatic hike or tax on people.
Everyone's seeing that when they go to the pump and the grocery store, and it's just absolutely insane. I went and I bought a chicken a couple weeks ago, Gareth. It was almost $20. Just a raw chicken. But the crazy thing is, I went and I bought one of those rotisserie pre-made ones. They were like $5.99.
I know.
No rhyme or reason.
I noticed the same thing. I bought chicken breast at Costco a few months back, and it was at least 50% higher. Generally I don't buy a lot of meat to eat at home. I kind of save that for going out. But at this time I did. It had been about 6 months, and it was 50% higher. So, I mean, people are feeling it. I'm in a very lucky position where, that price type movement like that doesn't affect my family. But there are a lot of people out there that really are seeing some major issues because of this. And it's a tough time for people.
Well, I mean, you have to look at all the people who've gone to work doing Uber or truck drivers. They've got to be getting killed right now.
Oh, yeah. I mean, there's no doubt about that. I mean, people picking up extra jobs. And I mean, the crazy thing about it is that for some reason, there's a lot of people out there that still don't want to re-enter the workforce. I always speculated that, it's partially to blame for the crypto boom at one point, and then the stock market, right? People were becoming traders, and they were just, seeing so much upside in the markets where they were like, oh, well, I'm making so much money in my 401k. I can sit back and just not to get a job. But I think that's starting to come off. And I'm very curious to see if you see people going out and people getting back into the workforce.
It's very reminiscent of the late 1990s with the internet bubble. And
everyone was a day trader back then.
No
Everyone
doubt.
was a trader. Everyone was a genius, right? Everyone was like, I'm a genius.
My first job out of school, I worked for a company in Manhattan, and the president of that company actually had retired. This was a few years after I left the company. And I kept in touch with everyone. He retired, and he sunk his whole entire retirement account into the markets and started trading it. Well, he blew his entire retirement, and the owners of the company actually gave him more additional money to live. But
wow.
Crazy times back then. And
that is, and it's, in all fairness, you could make a very good parallel. And I've said it before that, I think the dotcom era, that kind of collapse is what we're beginning to see in cryptocurrency. You have so much junk out there. And again, there's some amazing coins. I'm a big long-term believer in Bitcoin and some of these other ones. But you have to go through that collapse to wipe all the crap away. You have 15,000 cryptocurrencies. Where on earth is there a need for that many cryptocurrencies? You just don't need it.
Yeah, no, it's very similar to the tech companies back then. A lot of them made it through. Intel, Microsoft, but quite a few did not.
Yeah.
And I think we're going to see the same thing in crypto, the
I want to
shakeout.
show you something here that I'm fascinated about. I'm going to bring up my charts here to just give you guys a kind of a clear picture. Bear with me, but this is just something so cool, and I love to draw the parallels in crypto, right? So if you look at this is the daily chart of Bitcoin, right, and you see this beautiful kind of M top pattern which we saw in 2021. And then what I love to do is say, okay, now let's go back to Amazon, which was arguably the Bitcoin of the dot-coms, right? I mean, it was the biggest. It's turned out to be the best. And we'll flip over to the weekly so we can get back to that time frame. But if we go all the way back to the 99, 2000, look at the pattern on Amazon. It's almost identical to what Bitcoin put in, right?
Mm-hmm.
Incredible. That M kind of pattern, that double top, the second high was higher, just like the Bitcoin November high was a little bit higher than the early April high. I mean, it is very reminiscent. And then if the scary thing about it is, right, let's say we're here on the decline in Bitcoin. And if you zoom out more here and we go back to a little bit of a bigger, or we zoom over here,
Oh
I
yeah.
mean, look at how much more downside. I mean,
Right.
Amazon bottomed out at $6 after being $110. So it just shows you that there is a potential. Now, for everyone out there that's freaking out, don't freak out. And I'll show you why. If we zoom out, right? If we
Yeah.
zoom out and go to the monthly chart and go to this chart now. So this is going to be the monthly chart of Amazon. Look at what Amazon, this is that same M top that I showed you guys just a minute ago. That's that. And then look at Amazon where it went afterwards.
Boy,
So,
does that illustrate the importance of time frame consideration?
yep.
You know,
Isn't that incredible? Like
it
this, I
really
mean,
is.
it was so dramatic. Just like in this day and age, how this M top on Bitcoin. I mean, we've seen it fall 50%. It's so scary. And then if you look at it and you say, okay, well, what could be in 20, 25 years? And then you see how tiny that was and where it went. It's just kind of a cool thing. And like, as we all know, who the heck knows what really happens in the future? I'm no fortune teller. I just love comparing history and charts, but it's just so cool to see.
Gareth, have you looked at like the super long term charts?
I mean, I do like to look back in history. Like I love going back to the 70s for gold. I think that's really helpful to see kind of when we had big inflation of 10-ish%, how did gold behave? And it's actually given me that bullish bias, considering it doing exactly the same thing this round. But again, I don't always go back to the 1930s or the 20s that far back often. I do like to look back on occasion.
I only ask that because it looks like if you extrapolate what you were illustrating in the 1990s,
Mhm.
if you look at the long term chart, it looks like we're peaking.
Yeah.
You know what
Yeah.
I'm saying?
Oh, you're talking on Amazon recently. Yeah. Yeah.
No,
There's
just
no.
I'm talking about like the Dow, the
Mm.
Nasdaq, going back 100 years, and it's just like we had this like huge escalation up, and it looks like now we're going to go long term bear, but it's also looked like that for 20, 30 years. So
Yeah, and I mean, and you're making a valid point, and I do think that before you have great kind of collapses in the system, you tend to get these parabolic final moves, right? They call it a blow off top in
yeah.
technical analysis,
Hmm.
and
Hmm.
like you can see it here, and it makes perfect sense what happened, right? So I mean, this is just going back to kind of the 2000, basically the financial crisis, right? But
Yeah.
this was your long-term trend from 2010, 2011. And then if you go up here, here's your market on steroids, right? The Fed comes out with tons of stimulus and printing of money, even more so than they did from 2009 up to 2020. The government was sending out checks, tons of debt, tons of stimulus, and the market just went nuts. I mean, it was just a juiced market here. And now you started to really break back down. And you ask, well, what was the difference between this nice uptrend and this crazy move? Well, now the Fed is pulling back, right? It's the first time we've seen inflation coming above 2%, and that's problematic. And that's the question you have to ask yourself is, how does this market survive and continue to grind up? Even if it corrects here, how does it continue to go up in the face of such high inflation? And I honestly don't know the answer to that. I don't think the Fed has many bullets left in their gun that they can go to.
Gareth, would you mind just putting that chart back up for a second?
Absolutely. Yeah.
So, I mean, you see that upper trend line that it broke through back in, I guess that was late 2020.
Yeah. Right here.
No, in late 2020.
Oh, okay. Right over
Like
here.
right there, it broke through that upper trend line,
Mm-hmm.
I would think it's reasonable to assume it's going to come down and test that as a floor.
That's correct. Yeah. So that's my forecast is that at the very least we'll probably get a big bounce off this trend line here, stretching it out, because again, that was your breakout. This would be kind of a retest to the scene of the crime of the breakout. And then the idea that I've hypothesized is that if the Fed is able to engineer a soft landing where inflation comes in and they kind of just do that Goldilocks tightening just enough, then you go back inside your longer term trend when we were seeing GDP growth of 1% to 2% pre-COVID, right? But my fear is, what if the Fed tightens too quickly and they start to freak out? It does seem like they're thinking on that line at this point. Then they force us into a recession, which then could put us down in this range? So, I mean, definitely first support is going to be right here on the SPY, but then we probably trade back in here until we know what the Fed's, outcome on the economy is.
What would you be doing when we were testing that upper trend line there? Would you be sitting tight and just waiting for it to retest it and go up and then go long, or are you catching a knife down there and going long?
For me, I'm a shorter term trader, so that's exactly what I would do. Is I play support and resistance, right? So this would be support. So assuming we fell, let's just say in the next month we fall straight into this line, I will absolutely be a buyer there. But again, for me, it won't be a long term trade. It's important to kind of say that because a lot of people kind of think in absolute terms. So me, I'm a swing trader. I'll be looking for maybe a 5, 10% bounce in the markets off that level. And then I'll probably exit and take profits, worried that, again, the Fed has, to me, never proved that they can do an actual soft landing, right? Every time they start, the markets freak out. We saw it in 2018, and then they backed off and printed money. The problem is they can't back off and print money now the same way. And that word makes me worried that you're going to see longer term higher inflation. Eventually, they'll tighten too much. Unemployment surges. And then how do they handle high employment and high inflation? I honestly don't know.
I don't think they do either, actually.
No, I agree with you. They do not know. And I think they're kind of, it's like one of those things, if you close your eyes, like, please, please, please kind of thing, maybe it'll just work its way out. But I mean, my hypothesis is that they're going to play whack-a-mole, right? So inflation will inevitably come down from 9 to 10% or 8%, wherever it is. It'll come back to like 5%. In doing so, and by tightening and causing that, they're going to see a pop of unemployment, maybe to 7%. Now unemployment is higher than inflation, so they're going to have to print a little bit of money. That's going to raise inflation a little bit more, but bring down unemployment. And it's going to be like a back and forth seesaw that they're battling. And again, ultimately, those numbers will just grind higher on both sides.
No, that makes perfect sense. So what's your take on the overall market at this point? It's Monday. It's down about 700 points on the Dow. Nasdaq's down about 240. Do you think we put in a bottom last week and maybe we're testing it now, or do you think we have further to go?
So I'm in the camp, and again, this is a very risky position to be in, but I'm in the camp that at some point we're going to see some sort of resolution in the Ukraine-Russia, conflict, right? So I think you're going to get a short-term bounce in the markets. As we've seen, and I can show my NASDAQ chart here, we're kind of back testing this trend line, right? So here's your channel, and you can see basically during the COVID pump, here was your March 2020 collapse. And then basically you got within this range where you just went up and down and you stayed in the upper portion of the dotted line to the upper range, right? And now we've collapsed back down here. We bounced off the line. We broke. Now we're kind of back to that line. So my guess is what we're going to see is when the conflict gets a resolution, hopefully it's a good resolution. I think the markets initially gap up on happiness. And then you'll start seeing people saying, wait a minute, if Russia and Ukraine are no longer an issue for the global economy, here comes the Fed ready to hike rates aggressively, and you'll start to see technology take another leg lower. And again, same kind of thing. I think technology likely has a lot of downside to go. Wouldn't shock me to see pre-COVID lows at some point in the next 6 to 12 months.
Okay. And what's your outlook for precious metals?
Precious metals, to me, continuing to be the place to be. Since the very start of even December of this year, right, I've been bullish on gold. I love the idea of gold. Gold has officially broken out, which is something I've been calling for. You can see this trend line right here. Here was your breakout right here. You can see, I do think you might, if there's a resolution in Ukraine, you might see a pullback to the scene of the crime, this line. That's a big buying opportunity, as I think at that point you see a big move up in gold and you likely retest probably by midsummer, you could retest the 2075, 2020 highs.
Do you see a similar scenario for silver and platinum and the rest of the precious metals?
Yeah, so platinum, yes, silver, yes. Most of the metals, yes. You can see that you're kind of in the same issue of breaking out here on silver. So silver
Yeah.
is in the process. It's not as strong of a breakout because you also have the industrial side of silver where you have, it being used in car batteries and stuff like that. So if the economy slows, it takes a little away from the silver trade. But overall, again, I just don't see how the Fed can get away from not printing more money in the future when we see a decline in the economy. And that just means buy the metals, buy generally commodities. You'll have pullbacks, but they're likely going to go higher.
Now, I know we talked a little bit about crypto. What's your outlook on Bitcoin, Ethereum, etc.?
Yeah. So when looking at Bitcoin here, and again, this is an interesting one, is that you're still hovering within a range. Now, we did see a big pop yesterday into today on Bitcoin right here. And to me, the question is, was that a real pop? Was it because the oligarchs in Russia are, basically trying to avoid sanctions by going into crypto? I did see a thing about wallets that held more than 1,000 Bitcoin, and there was a huge jump just over the last few days. So my guess is there is some play there. The question is, if you do get a resolution at some point, does that come back down? Do they sell? Do they rotate back into rubles or other currencies where the sanctions at that point, if they're taken back a little bit, don't hurt them as much? But my biggest fear, again, is that at some point, we're going to see continued downside. I actually was in crypto positions today and yesterday. I did unload a chunk of them. So again, I did take I had 15% of my portfolio long Bitcoin. I took off 5% of that. So I'm just 10% long of my portfolio in Bitcoin. And again, basically what I'm looking at is you have this channel. And, yes, we could go up maybe as high as 47, maybe as high as 50. But ultimately, this pattern generally plays out like this. You have a big drop, and then it chops quite a bit here like this. And then that's creating a bear flag, which ultimately leads you to further downside. So near term is going to be choppy on Bitcoin. I think you got a lot more chop here, maybe even a little bit more upside from current levels. But ultimately, if you ask me where we are in 6 to 12 months, I think we are around the 20,000 marker.
I think that ties into the political climate for crypto that we're experiencing right now too.
Yeah, I agree. I mean, it's really an interesting scenario, right? You're getting a lot of positives on crypto, like the mere fact that the geopolitical scene has gotten crazy, and that makes crypto more likely to succeed. And I think for the long term on crypto, it makes a lot of sense, right? People can be out of kind of, you don't really care what this country's doing or what that country's doing if you have Bitcoin. But
Yep.
but again, at the same time, you still have a lot of fluff and a lot of leverage. And if the Fed eventually is going to tighten more, which I do think they are, then that leverage is going to come out of the markets, out of tech stocks, and eventually out of crypto, knocking it back down.
Did you follow the bond market at all?
A little bit. Yeah. I watched the 10-year yield. Absolutely. And, the yield has pulled back tremendously. And again, the yield is basically pricing in, number one, money's rushing into the safety of bonds.
Yeah.
But number two, it's also saying these issues globally could make the Fed move slower, in which case yields aren't as high because of that. So definitely worth watching the 10-year yield. Usually the 10-year yield was the biggest thing that the market was paying attention to on a day-to-day basis. It's now switched just today. It's more of an inverse tick for tick with oil. Oil has really started to cause the market some worry because WTI is seeing a big surge to the upside. In fact, I had a lot of resistance right up in this 95, 96 range, and we have now blown above it. I'm not convinced it's going to hold because it's geopolitically based. But again, certainly we are trading at about 103 right now, and you are above all these trend lines. So we got to watch it. I'm curious if we see Biden tonight in the State of the Union. Is he going to talk about maybe releasing oil from the strategic reserve? Is there anything done with OPEC and Saudi Arabia, maybe Iran, a deal with Iran to supply more oil? Because let's be honest, the higher oil stays, the better position Putin is in Russia, because they can just continue to sell their oil for these crazy levels, and the sanctions won't have quite as much of an impact.
Yeah, that's true. I mean, you look at that chart and it looks like it could be toppy there, but
Yeah.
things have been known to consolidate and go higher.
Yeah, I mean, with geopolitical stuff, you just never know. I am short oil. I'll admit it right now. I am short oil up here. But again, it's calculated in a matter of risk within my overall portfolio.
Yeah, and people have to really take into consideration what your time frame is compared to theirs, and I think that's a big problem for a lot of people. They see some person on one of the major networks talk about, oh, I'm long this, I'm short that, but they could be just for a couple days or a few
Right.
months, and then people are investing in their portfolio for their 401k or whatever. So
Yeah, and I always say that no matter who you listen to, if you take advice from me or thousands of other great minds in the industry, you should take a lot of people's advice and then think about it and decide what's best fit for you, right? No one has a perfect mix here. No one's going to be 100%, but you have to kind of think logically for yourself, your situation, your time frame, and then make that decision accordingly.
no doubt about it. Well, Gareth, I really appreciate your time today. It's been great as always. I look forward to having you back soon. Stay safe out there.
Thank you so much, Lee. It's been great. Thank you.